Hello everyone, and welcome to this quick dive into the most influential book on Bitcoin, The Bitcoin Standard by Saifedean Ammous. If you've ever wondered why our money system feels broken, or why Bitcoin keeps making headlines, this book has the answers. Today, I'll summarize its main points, provide some historical context, and highlight the key lessons you can take away. First, a bit of context. Published in 2018, the Bitcoin Standard came at a time when Bitcoin was gaining traction. Invented by the pseudonymous Satoshi Nakamoto in 2008, it rose amid growing distrust in traditional finance following the 2008 financial crisis. The author, an engineer and economist influenced by Austrian economics, argues that to understand Bitcoin, we must first grasp the history of money. The book isn't just a Bitcoin promo. It's a sweeping critique of fiat currency and central banking. It positions Bitcoin as a decentralized alternative that revives the principles of sound money. It's rooted in the idea that money isn't just paper or digits. It's a technology that shapes society, economy, and culture. Now let's break down the main points. The book is structured in three parts: history, flaws of fiat, and the Bitcoin solution. Starting with money's evolution. He traces money from primitive barter systems to sophisticated currencies. Early societies used items like rye stones on Yap Island, massive, immovable rocks that served as money. They worked because they were hard to produce and had a high stock-to-flow ratio. This means the existing supply far outpaced new production, making them sound money, reliable stores of value. From there, we move to beads, seashells, and eventually metals like silver and gold. Gold won out globally because of its scarcity, durability, and salability. It's divisible, portable across space, and holds value over time. But gold had flaws. It's centralized in banks for convenience, making it vulnerable to government control. This led to the gold standard era, which promoted stability and innovation in the 19th century. Think rapid industrialization, the steam engine, and flourishing global trade. However, governments gradually decoupled money from gold, culminating in 1971. That's when President Nixon ended the US dollar's convertibility to gold, ushering in the fiat era. Fiat is money backed only by government decree, easy to print and prone to inflation. The author hammers home the problems with fiat. The financial trinity of central banks controls the supply, this leading to artificial booms and devastating busts as new money fuels asset bubbles. He critiques Keynesian economics for promoting endless spending, which creates the Cantillon effect. This benefits those closest to the source while inflating the cost of living for everyone else. Fiat also raises time preference. People focus on short-term consumption over long-term saving. This leads to debt, stagnating wages, and even cultural declines compared to timeless masterpieces. Enter Bitcoin. The author calls it digital sound money, operating on a peer-to-peer network. It uses blockchain technology, a decentralized ledger secured by proof of work and SHA-256 hashing. With a fixed supply of 21 million coins, its stock-to-flow ratio will eventually approach infinity. Unlike gold, it's digital, borderless, and resistant to seizure. Pure verification, zero trust. The Bitcoin base layer, the time chain, isn't for coffee purchases. It's a store of value, SIW, and settlement layer for large transactions. So, what lessons can we learn? First, sound money is crucial for prosperity and long-term thinking. Unsound money erodes wealth and lets governments fund wars through inflation, stealing from the future. Second, money shapes society. Sound systems foster peace and trade. Fiat leads to conflict. Third, Bitcoin offers hope. It's a monetary lifeboat based on the ripcord principles. It empowers individuals with sovereignty over their wealth. No bank can freeze your account. Finally, human ingenuity thrives when resources are allocated by free markets, not central planners. Scarcity isn't in materials, but in time. Sound money preserves the value of your efforts. In conclusion, the Bitcoin Standard is a call to rethink money's role in our lives. Whether you're a skeptic or enthusiast, it challenges you to question the status quo. Thanks for watching. Like, subscribe, and let me know your thoughts in the comments.